Hello class, welcome to our YouTube channel. Our discussion for today is all about under perpetual inventory system. So we will talk about the how the under perpetual inventory system is characterized by the use of the merchandise inventory account as an asset with the following debit and credit postings. So here is at the account for the merchandise inventory. On the left side is the debit side, and on the right side is a credit side. So we will record merchandise inventory on the debit side when first is to record purchases. Next is second to record freight in. Next is to excess, or if there is an excess of actual inventory against stock card. Next, on the credit side, we will record merchandise inventory on the credit side first if it is to record purchase returns. Purchase returns and allowances kapag ibinalik ang nabili, and allowances. Next is to record purchase discount. So kapag meron tayong discounts kapag bumili tayo ng merchandise. So we have to credit merchandise inventory under the perpetual inventory system. Next is to record actual cost of goods sold. And number 4, excess of stock card against actual inventory. Okay, so always remember this. Under the perpetual system, we have to debit merchandise inventory if it is to record purchases, to record freight in, and there is an excess of actual inventory against the stock card. And on the credit side, if we have to record purchase returns and allowances, to purchase discounts, to record actual cost of goods sold, and excess of stock card against actual inventory. Take note that under the perpetual inventory system, the use of stock card is a must because there is also a continuous updating of the ins and outs in the stock card every time there are purchases and sales of merchandise. So, kailangan may stock card and continuous updating of the ins and outs. So, tingnan natin ang example ng stock card. This is from Rafael Lopez Jr. na book about basic accounting. So, here is an example of stock card for the perpetual inventory system. We have supplier. For example, we have Sarangani Cattle Ranch. Description, top round beef. So, on the left side, there is a date. Then, there is a unit cost. Received, the quantity, the amount. Issued, quantity, amount. Balance, quantity, and amount. So for example, on January 1, there is a unit cost of 240 pesos. And that 240 pesos is 50 kilograms ang kanyang quantity, and the total amount is 12,000. On January 8, another 240 units and received of 100 for the total amount of 24,000. So this 50 kilograms worth 12,000 is the beginning balance. Then on January 8, naka-receive ng 100 pieces na merchandise, and then 240 ang kada isa. So the total amount of 24,000. So 50 plus 100 quantity, so the total is 150 kilograms. Then the total amount is 36,000. On January 20, they issued 80 kilograms worth 19,200. So this is the cost of sales. So 150 less 80, so there is 70 kilograms balance, and the total amount balance is 16,800. So that's the example of a stock card. So let's continue. Therefore, if perpetual inventory system is used, there is no need to establish ending inventory because the stock card reflects both the cost of sales and the inventory at the end of the amount of 16,800. So, moreover, there are two things that we should be reminded of under perpetual inventory system. First is in recording sales. So, in recording sales, we have two entries. First entry is we have to debit accounts receivable and credit sales. So, we have to debit accounts receivable if we sell the products or the merchandise in account. So, ibig sabihin, meron pa tayong receivable sa customer. Debit, accounts receivable, and credit sales. For the second entry, we also debit cost of sales and credit merchandise inventory kasi naka-issue tayo or naka-benta tayo ng merchandise inventory. So, kaya si merchandise inventory is decreasing, kaya nag-credit tayo dito. Then, cost of sales, debit. So, the second entry reduces the actual cost of goods sold or the cost of sales. Same lang sila. Next is, in recording sales, returns, and allowances, we have also two entries for this. So, the first entry is for recording the sales, returns, and allowances. We have to debit the sales, returns, and allowances. Sales, returns, and allowances. Next is we have to credit the accounts receivable. Kasi ibinalik ng customer, meron siyang ibinalik na merchandise. So, kaya yung accounts receivable natin na debit kanina is credit na ngayon kasi the accounts receivable decrease. Next, second entry is we have to debit merchandise kasi nabalik sa atin yung merchandise. So, merchandise inventory nadagdagan naman kaya debit. So, increase. Then, the cost of sales, credit. So, in the second entry, merchandise inventory was debited to increase the cost of goods or the goods available for sale, and credited cost of sales to effect reduction of the cost of goods sold. So, in the second entry, merchandise inventory merchandise inventory was debited. Bakit? To increase the goods available for sale. Then, the cost of sales is credited to effect reduction of the cost of goods sold. So that's it for our discussion for the merchandising inventory under the perpetual inventory system. So thank you so much, class, for listening. Hope you learned something, and don't forget to like and subscribe to our channel. God bless.